Can a duo run consumer banking? They're going to try that at J.P. Morgan. Is it feasible?
I'm never a fan of dual heads. Having said that, J.P. Morgan cultivates a culture of collaboration. So whoever collaborates better is ironically the one who could ultimately win. We have two women who are in contention to take Jamie Dimon's job. Having said that, you know when Jamie Dimon retires? N+5. Add 5 years to whenever you ask him the question. So I don't think it's happening anytime soon. I think that the board wants him to stay, investors want him to stay, but you do have two women who are in contention.
If the two women are in contention, two men in contention, let's be honest, this is absolutely original stuff. To your research note, which stopped Wall Street a few days ago, how will the dominant J.P. Morgan consumer franchise and adapt and adjust to automation, to digital banking, and the rest that you highlight?
Well, J.P. Morgan is a microcosm of the broader industry. And for you, Tom, I'm going to the classics. I'm going to the Greek philosopher Plato, who said, necessity is the mother of invention. Banks have no choice but to get more efficient, to use automation, and to streamline. So whether it's J.P. Morgan or any other bank, even though they're opening up branches and hiring advisors and all sorts of people, over the next 10 years, we expect headcount to decline by 200,000 jobs, up to 200,000 jobs for the banking industry. And that's because you have automation in the back office, digitization in the front office, and because banks have no choice as they compete against big tech, big retail, and a bunch of non-banks that have a lot less regulation.
How's that going to go down politically, Mike?
Not always well, but it can be better than in the past because with natural attrition, banks can try to, walk that fine line between becoming a lot more efficient and without destroying their, political and regulatory reputations and also their ESG scores because everyone's watching, if you fire a lot of people, that hurts your ESG scores. So it's a tough job. It's a different job to be a bank CEO today. In the past, it was about creating, generating sustained long-term value. Today, it's doing that and a lot more. You need to be more attuned to issues around climate and social issues and diversity. And so it's a bigger challenge.
Mike, what does that mean for the physical presence on Main Street?
Well, a lot less branches. You're going to see a lot less branches and a lot less people per branch. And they call it DIY, do it yourself, and also more do it together services. So you'll see banks, working with customers to show them how to adapt to using more digital tools. And the pandemic turbocharged the tech revolution at banks. You can't force a change in customer behavior, but the pandemic did so, and that played into the banking industry's strategic playbook for the next 5 to 10 years.
Mike, when you talk about competition from a number of different sources, we should also talk about competition from the Federal Reserve itself or from the U.S. government. The Federal Reserve saying yesterday that they're going to put out a report on the U.S. digital dollar debate this summer that could disintermediate the big banks. How much are you paying attention to this?
Well, you have to pay attention to this. I mean, there's threats to banks, and disintermediation of banking goes back, half a century. And so you first saw that with traditional bank loans getting disintermediated to the capital markets. And then you've seen that with some of the fintech players and the payments business. And so you have to watch, anything related to, digital currencies or anything else. Having said that, I think the banking industry's business model resiliency for the largest banks is underappreciated. And a deposit at a large bank is different than a deposit at another bank. It's driven by a hybrid distribution system that's physical and digital. It's driven by multi-products, whether it's a checking account, savings account, credit card, mortgage, investment. So, yes, you have to watch this, but the death of banks has been greatly exaggerated the last few decades.
Mike, perhaps the death of banks, but just quickly here, I'm wondering what you think in terms of mergers and acquisitions. How consolidated could the industry get as they cut what you estimate to be 200,000 jobs?
Absolutely, there should be an acceleration in bank mergers. Goliath is winning. The largest banks have scale. The smaller banks need to generate that scale. That was mentioned as the number one reason for the biggest recent merger in the last few years, now known as Truist. So we wouldn't be surprised to see half the number of banks out there, over the next decade.
Mike,
More mergers to come.
Just before we run, Mike, a lot has been made of ESG and diversity, and you touched on that yourself in this conversation. You were the one to bring it up. Why do you think that wasn't a big part of the consideration for Morgan Stanley's shake-up?
Look, ultimately, the ability of managers to, generate the returns, help the firm as a whole, and represent the firm, drives these decisions. And so, Jamie Dimon didn't select the two women co-heads of consumer who are likely one of those or the next successor because they're women. It's because they're the most capable. So I think the chips fall where they will.